Get ready for the action, because the data center boom is heating up across America. West Virginia natural gas producer EQT Corp is locking in massive supply opportunities, with President and CEO Toby Rice confirming robust pipeline negotiations for billions of cubic feet of gas needed to power the growing demand for data centers in Appalachia. This is huge for energy infrastructure and the future of AI power needs.
Never get caught with a dead phone again. This INIU portable charger is compact, travel-friendly, and gives you fast 45-watt charging with a built-in USB-C cable, so there's no need to carry extra cords. With 10,000 mAh power, it's perfect for busy days, trips, emergencies, or anytime your battery drops too low. Grab yours on Amazon through the link in the comments before your phone hits 1%.
Meanwhile, the demand for space is exploding, and small towns are facing massive decisions. In Pennsylvania, Archbald is grappling with 6 proposed AI data centers, with each facility potentially the size of a Walmart supercenter, leading to intense community pushback as town council members resign amid the fight over local infrastructure and pollution concerns. But the technology powering this revolution is advancing at lightning speed. Supermicro is expanding its data center building block solutions with new ARM-based server platforms and open compute project systems, enabling next-generation AI infrastructure with high-density, liquid-cooled systems designed to maximize performance per watt. And the big picture? ABB's Q1 FY 2026 earnings show electrification accelerating, with management highlighting triple-digit growth in data center orders, signaling sustained demand across hyperscalers and colocation providers. Don't miss our full breakdown of these massive market shifts. Stay locked in for more. West Virginia is emerging as a key hub for data center development, attracting significant interest from natural gas producers in the Marcellus Shale fields. Site work has already commenced on the Monarch Compute Campus data center near Point Pleasant, Mason County, as reported on April 18, 2026. Natural gas producer EQT Corp is positioned to supply the necessary power for these growing data centers across Appalachia. Toby Rice, president and CEO of EQT Corp, highlighted the robust pipeline of opportunities the company is currently negotiating, stating, "We're really excited about how Appalachia is positioned to be the home for a lot of these projects." And then for us, what that translates to EQT specifically, we've got a robust pipeline of these opportunities that are currently being negotiated. I mean, we're looking at multiple billion cubic feet a day of supply opportunities. EQT maintains a significant operational footprint in the Utica and Marcellus Shale regions of northern West Virginia, eastern Ohio, and western Pennsylvania. The company's interest in data centers is supported by broader market trends, as EQT anticipates that the proliferation of data centers and artificial intelligence will significantly boost natural gas demand. Rice cited 3 key drivers: a 14 billion cubic feet per day growth in U.S. gas-fired power demand between 2014 and 2026 due to the shift from coal, an additional 10 billion cubic feet per day by 2030 from data center and AI growth alongside coal plant retirements, and a potential surge to 18 billion cubic feet per day if data center build-out accelerates. EQT's involvement in energy infrastructure is not new. In July 2025, Frontier Group of companies announced plans for a power plant to fuel a data center on the site of the former Bruce Mansfield power plant near Pittsburgh. This facility would utilize natural gas and could generate up to 3 gigawatts of power, with EQT selected as the supplier. Furthermore, local efforts are supporting these developments. Hope Gas announced plans in March to construct a 30-mile, $250 million natural gas pipeline to northern Mason County to support new industry and residences, including the N-Scale data center site near Point Pleasant. EQT remains optimistic about the near-term outlook, suggesting that many of these opportunities are expected to materialize in the second half of the year. Noi Dung Kai Tait. Residents of the small Pennsylvania town of Archbald are fiercely resisting the proposal for 6 massive AI data centers, developments that would encompass 51 data warehouses, each comparable in size to a Walmart supercenter, across 14% of the town's 17-square-mile area. This conflict has led to significant political upheaval, with 4 of the 7 town council members resigning amid intense community opposition. Backlash, and the push for these data centers comes despite Archbald's history as a coal mining hub, now a quiet town grappling with the decline of that industry. Developers are capitalizing on local resources, particularly proximity to the 500 kV Susquehanna-Roseland power line, which provides easy access to the 2.5 gigawatt Susquehanna nuclear power plant, reducing infrastructure investment needs. And however, the community's concerns extend beyond infrastructure. Residents are deeply worried about the potential impacts on local utilities, including concerns over noise and light pollution, and reports of increased electricity rates and reduced power quality in neighboring communities. These anxieties have escalated to the point where high-level political figures have intervened, with President Donald Trump reportedly urging hyperscalers to commit to ratepayer protection pledges, though these assurances appear insufficient. And the struggle over permits has become highly personal. The conflict has intensified on social media, with former council members citing personal attacks and incidents involving other development fights as reasons for their resignations. Furthermore, one project's alleged violation of regulations involving tree cutting highlighted the town's industrial history, according to newly elected council member Larry West, who stated that the emergence of data centers mirrors the town's dirty past, now manifesting in a new form of environmental challenge. Supermicro Computer, Inc. has significantly expanded its data center building block solutions portfolio, introducing new ARM-based server platforms powered by the ARM AGI CPU and updated Open Compute Project, or OCP, compliant rack offerings, signaling a major push into next-generation artificial intelligence and high-performance computing infrastructure. The expansion focuses on delivering scalable, flexible, and highly energy-efficient data center solutions. Charles Liang, president and CEO of Supermicro, stated that the new portfolio, featuring high-density, liquid-cooled systems and energy-efficient ARM architectures, is designed to maximize performance per watt and accelerate AI adoption across cloud and enterprise environments. The data center building block solutions approach provides end-to-end deployment flexibility, encompassing everything from individual GPUs and networking switches to complete racks, site infrastructure, management software, and professional services. This advancement is heavily supported by collaboration with ARM. Mohammed Awad, Executive Vice President of the Cloud AI Business Unit at ARM, highlighted that ARM AGI CPU-based platforms, built on ARM Neoverse technology, provide the foundational compute for this new generation, which Supermicro is bringing to market in flexible, high-density systems optimized for modern AI. Steve Helvey, Chief Emerging Ecosystem Officer at the OCP Foundation, noted that integrating energy-efficient ARM Neoverse platforms into Supermicro's ORV3 portfolio is extending the open supply chain for AI infrastructure by delivering modular, liquid-cooled building blocks. The expanded OCP ORV3 portfolio includes new rack configurations and purpose-built servers. A notable addition is a new 2U GPU system compatible with 21-inch OCP ORV3 racks, featuring dual Intel Xeon 6 6700 series processors, an OCP-inspired 1400A busbar with power shelves, and integration with the NVIDIA HGX B308 GPU platform and 5th-generation NVLink, tailored for large-scale AI deployments. Furthermore, Supermicro introduced the FlexTwin system, a high-density, dual-node platform housed in a single 1OU chassis. This system is optimized for HPC and AI workloads, supporting the latest and future Intel and AMD CPUs, and leveraging Supermicro's DLC-2 liquid cooling solution to remove up to 90% of system-generated heat. In addition to these, Supermicro is launching 2 new ARM-based systems powered by the ARM AGI CPU in both 2U and 5U form factors, designed to deliver high core density, increased memory capacity, and flexible I/O for agentic AI infrastructure. Supermicro remains a leader in application-optimized total IT solutions, leveraging its expertise in server, AI, storage, and networking to drive innovation from cloud to edge, while actively supporting the Open Compute Project through its involvement on the OCP Advisory Board. ABB reported robust first-quarter fiscal 2026 earnings, driven primarily by accelerating electrification demand within the data center and utility sectors. The company announced an 18% year-on-year revenue increase to $8.7 billion, surpassing the street consensus of $8.4 billion. Electrification revenue surged 21% year-on-year to $4.6 billion, while motion and automation revenues also showed significant growth. Financial performance reflected strong operational health. Income from operations reached $1.8 billion with a 20.4% margin, and operational EBITDA stood at $2 billion, achieving a 23.5% margin. Net income attributable to ABB rose 20% year-on-year, and basic earnings per share, EPS, increased by 21% to 70 cents. Cash flow from operating activities saw a substantial 50% year-on-year jump to $1 billion, with free cash flow surging 92% to $1.3 billion. CEO Morten Wierod stated that the strong start to the year, supported by a high order backlog and execution in a strong short-cycle market, warranted raising full-year growth and margin expectations for 2026, while cautioning about geopolitical uncertainties. Analyst commentary highlights that demand remains solid across core markets, with electrification leading the quarter in record orders. Management pointed to continued strength in data centers, utilities, and transport electrical upgrades. Electrification orders grew by 44% on a comparable basis, featuring triple-digit growth in data center orders. While delivery timelines for many data center orders span 12 to 24 months, allowing for revenue conversion, management emphasized a balanced allocation strategy across end markets. Key strategic focus areas include converting order surges into sustained margin expansion while scaling data center power offerings. ABB is navigating mix and hedge effects pressuring gross margins, counteracted by rigorous SG&A control. The company is also addressing a price-cost gap in electrification, with management anticipating this gap to narrow in the second half of FY 2026. In the automation segment, ABB introduced Automation Extended, a strategy to modernize distributed control system environments by separating core control from the digital layer. Success in this area is measured through recurring service and upgrade revenue, aiming to boost margins over time through software and lifecycle services. This approach is intended to drive cross-selling opportunities across the portfolio. Looking ahead, ABB raised its comparable revenue growth expectation for FY 2026 to a high single-digit to low double-digit range, projecting an improvement in operational EBITDA margin year-over-year. The company remains focused on disciplined capital allocation, favoring value-creating acquisitions, while emphasizing the need to maintain tight price-cost discipline amid scaling delivery and broadening data center scope to prove the durability of the current tailwinds.